All right, guys. So we will discuss the topic that Indian rupee depreciate to all-time low. So we will look at the reasons and everything for this. See, guys, Indian rupee have hit an all-time low against US dollar. That means rupee is depreciating and breaching the 84 mark. Okay, so $1 is 84 rupee, and this is a significant moment as it basically indicate increasing pressure on India's economy. See, 10 years ago, if you look at the rupee traded at around 60 per dollar, and since then it has been gradually depreciating. However, in the last few years, the depreciation has been more pronounced. And this actually raised questions about what are the factors that are driving this decline and whether the rupee will continue to fall further and will it even go and touch 100 rupee per dollar. Now, let's try to understand why this is happening and or the other dimensions which are connected to this. So if you see, currently the exchange rate has touched all-time low of 84 and it has remained in this band for past a few weeks if you see. So it seemed imminent that the rupee would cross the threshold and it finally did last week. So this year the rupee has mostly stayed above 82, but the persistent downward trend is very much concerning, and that shows the weakness of our economy. And the rupee depreciation since 2022 has been around 9%. So rupees depreciating in terms of 9%. So you buy dollar and hold with you. What is actually happening is you can beat inflation, and you can also, by getting this, rupee depreciation means you can beat inflation also just by holding dollar. Dollar is getting stronger and stronger when it comes to, comparison with rupee, which is, more than the average long-term depreciation, which is 3% per year. 2 years you can see 9%, but if you see the average, if you consider slightly longer period, it's 3%. And that indicate rupee has been falling at a very faster pace. And dollar is getting more stronger when it is compared with rupee. Okay. So now, foreign investment and the market volatility, if you look at one of the primary reason for this decline is the volatility in the Indian stock market. So since the start of 2024, foreign investors had invested around $25 billion in the Indian market. So they are coming with dollar. But in October alone, they have withdrawn 8 billion due to profit booking. And it's almost 33% of incoming has been taken back, right? And when foreign investors pull out the fund, it increases the demand for dollar. So that again will affect, and that will reduce the value of rupee. They demand more dollar, which will reduce ultimately the value of rupee because demand for dollar is high. So supply is less, so automatically rupee depreciate. And experts predict that if the stock market continue to face downward pressure, the rupee can fall even below than its current value of 84. Now, let's move on to the Forex reserve. See, guys, fortunately, India have built a strong Forex reserve, which recently crossed $600 billion. Okay, so that's huge Forex reserve. And this provides some cushion against a sharp fall in the rupee. So if there is an aggressive demand of dollar, RBI can pump dollar and that can be tackled. So rather than, rupee depreciating too drastically. So RBI has been actively managing these reserves to stabilize the currency in times of crisis. So what RBI can do is RBI can pump dollar if there is a huge demand. However, the problem is if foreign funds continue to flow out and geopolitical tension also persists. Now, if you look at Iran situation, etc., it will be challenging to keep rupee stable, and rupee can further get weakened and can further get depreciated also. So that's again a major concern. And if you look at the impact of global factors, the value of rupee is actually influenced by India's market strength on one side and attractiveness to foreign investment also. But global geopolitical instability, such as the ongoing conflict in the Middle East and between Russia, Ukraine, it have significant impact. And disruptions in the supply chain and rising crude oil price due to these conflicts are contributing factors to rupee depreciation, actually. So these are not in our hand. Okay, so something which is not in our hand, there are a lot of difficulty to manage. Again, coming to rise in crude oil prices, India's crude oil demand, and we import right? And India imports around 85% of its crude oil needs. And when oil prices rises, it put additional pressure on rupee. We need to pay in terms of dollar. So that again lead to demand of dollar, right? And the increased cost of importing. When you say importing, you are paying in dollar. If you are exporting, that's better. But your major import is in, crude oil. Your 85% crude oil requirement are from imports. Crude oil prices also increasing. That means you are supposed to pay more in terms of dollars, and that weakens the currency further. Moreover, the funds flowing out of India to other markets such as China, Japan, and Indonesia also adding pressure to rupee. So foreign investors are preferring these destinations also. The FIIs are now moving to China. So these are very much badly affecting the country. And if you look at the impact on trade or effect on importers and exporters, when rupee weakens, who will gain? Exporters will gain. They get in terms of dollar, but importers will suffer here. So we are very much importing the crude. So you can understand the reason. So when rupee, this can be a potential prelims question also. When rupee weakens, imports becomes more expensive. Okay, very expensive. So impacting various sectors like electronics, machinery, and chemicals. And the raw material cost will increase automatically. That can lead to inflation. And this is evident from India's current account deficit, which reached around 9.7 billion in the first quarter of this year. That is because of rupee depreciation only. You can attribute it to that increased current account deficit. Why? Import cost is higher. Okay, so exporters on the other hand are not necessarily benefiting also from the weaker rupee because global demand remains sluggish. If global demand is there, exporters will benefit. Normally, if rupee depreciate but the demand remain the same, then exporters will benefit, IT sector or whatever, it will benefit. But now the issue is with the global demand also. There is a slowdown in global demand because of these Middle East tensions and geopolitical tension. So despite the fact that rupee is depreciating, the exporters are also not getting benefit. So the global demand is less, so exporters naturally came down. At the same time, importers getting, very expensive. So that's why current account deficit is also rising. See, if you see goods export from April to August only grew by 1% despite 11% growth in services. Okay. Now, what is RBI's role? How can we conclude this? Yeah, step by step. We have discussed that in the economy session. See, in summary, neither importers nor exporters are actually benefiting from the current situation. Normally, exporters will benefit, and we discussed about devaluation of currency by China to promote exports and everything. And one of the advantage of depreciating, rupees, actually exporters will benefit. But here, even the exporters are also not getting benefit because of the issue with the global demand. That's a different reason. Importers are getting the pain because of the depreciation of rupee. So both are there at the same time, and it's leading to a net loss for the economy. So the RBI keeps a close watch on rupee and can step in by supplying dollars from its forex reserve. If currency falls too sharply, that's what RBI can do. RBI can pump. Okay, and ultimately, the strength of Indian economy will play a key role in stabilizing the rupee in the long term. So that's about this session. I just wanted to tell you the potential reasons and everything for this decline. And that's it, guys. Thank you so much for watching. See you in the next session.